course, I'm here to show you about my stock account today. Today, the United States Treasury released the Department of Commerce released the CPI for June, and today SQQQ made a loss of 3.676% to 18.44, and United Natural Gas made a loss of 3.01% to 708. Today's market closed higher due to the optimism provided by CPI. Dow Jones Industrial Average closed up 0.25%, Nasdaq Composite closed up 1.15%, and S&P 500 closed up 0.74%. Internet content and semiconductors led with the gains. They closed up with a gain of more than 30%, whereas the healthcare industry closed down with a loss of more than 3%. The inflation in the U.S. cooled sharply in June with a CPI annualized rate of 3.0%, and the end of the most aggressive interest rate hike cycle in 40 years is in sight. The sharp cooling of inflation in the U.S. in June has raised new hopes that the Fed will soon end its most aggressive rate hikes in decades. U.S. Labor Department data shows that the Consumer Price Index rose 3% year-on-year in June, significantly lower than the recent peak of 9.1% recorded in June 2022, and down from 4% in May, according to data released by the U.S. Labor Department on Wednesday. The last time U.S. inflation was close to 3% in March 2021. Still, inflation is above the Fed's 2% target. Fed officials previously said they could raise interest rates again at their July 25th to 26th meeting, raising the benchmark to a 20-year high, given the signs that the near-term economic activity was stronger than expected. Wednesday's inflation report is not expected to change that result. Last month, Fed officials left the federal funds rate unchanged at its target range of 5% to 5.25%, their first pause after 10 consecutive rate hikes since March 2022. This rate hike cycle is also the most aggressive since 1982. At the meeting, most Fed officials expected 2 or more rate hikes this year. Excluding volatile food and energy prices, the June core CPI rose 4.8% year-on-year, the lowest increase since October 2021 and down from 5.3% in May. Economists expected the core CPI to rise 4% year-on-year. Rising auto prices, strong demand for labor-intensive services, and earlier spikes in house rental prices have contributed to persistently high core inflation. George Mateo, Chief Investment Officer at Key Private Bank, said, "The latest report proves that the inflation has finally cooled, and that the Fed will also take the data as a proof that its policies having desired effect. But the inflation has fallen and the growth is not stalled. But the policymakers tend to focus more on the core inflation, which they see as a better predictor of future inflation than headline inflation." Mateo said in the report, the report is unlikely to prevent the central bank from raising interest rates again later this month. On a month-to-month basis, the U.S. CPI rose 0.2% in June, up from 0.1% in the previous month. Core CPI rose 0.2% month-to-month, the smallest monthly gain since August 2021, suggesting the underlying price pressure are gradually easing. Fed officials expect the inflation to continue to fall, especially as housing costs fall. Housing costs account for about a third of the CPI weighting. However, the housing index rose 0.2% month-to-month and 7.8% year-on-year in June. The Bureau of Labor Statistics says the monthly increase contributed to about 70% of the month's CPI increase. Traders still expect the Fed to raise rates by 25 basis points at its July meeting, but they also believe that this may be the last. After the release of the CPI data, FedWatch Tool shows that the investor put the probability of a 25 basis point rate hike at its July meeting as 92.4%, and 75.8% that this is the last rate hike of this year. The U.S. economy has remained resilient this year, defying recession predictions. Hiring slowed in June but remained strong, although consumer spending quoting May from the previous months. According to the latest forecast of Atlanta Fed, the United States will achieve an annualized GDP growth of 2.3% in the second quarter. That's all I have for today. And I wanted to add on that I will shorten the position of SKUQ due to the expectation of a price adjustment of Nasdaq recently. And thank you for listening.